by myself, Stu Whisson. In these videos, just in case you haven't caught on already, basically what they do is they're a means for you to kind of read along when somebody is actually, me for instance, talking through the same article and reading it to you. Now, studies have shown, and I have done some reading on this, honest, the studies have shown that when somebody is actually reading to you and you're reading along, you actually sort of internalize it a lot more. You actually engage in the reading of it, and you understand it better rather than just reading it yourself. So for each and every article, we will be producing, I will be producing an accompanying video, which is like a sort of somebody sitting next to you just reading a book to you. I know it doesn't sound that exciting, and I may stumble on some of my words, and okay, some of my grammar is not brilliant, hey, shoot me. Well, no, don't. But the whole idea really is to have somebody reading to you, so you can just kind of read along with me, and get an idea of what it is I'm talking about. So here we go. This is the basics of the Forex market. The Forex market, or foreign exchange, FX, or sometimes referred to as the currency market, is a global exchange for international currencies. Now, it is these markets and the buying and selling of exchange pairs, otherwise known as currency pairs, that determine the valuation placed on worldwide currencies. Now, obviously, there are many factors that determine whether a currency's value increases or decreases. For example, the demand of one currency can mean that there is a demand for products or services from that country of origin. Some currencies are also purchased and held in reserve, usually the US dollar, the UK British pound, sterling, and the Swiss franc. Now, certainly if that currency value is placed at a low from its normal historic value, now it is usually common to see an increase in buying of that currency at a lower historic values. This helps with those looking at international trade to secure a better price for the importing of goods and services from the currency's country of origin. You with me? Now, large corporations do this to maintain price consistency with manufacturing, etc. Now, the foreign exchange market is the largest, it's huge, it's massive market in the world, with an incredible average turnover of around about $4 trillion US per day. That's per day. Now, this is increasing almost daily as the FX market becomes more popular, not just as a means of inter-market global trading, but as a form of speculation amongst those trading the market. In fact, in the last 10 years, there's been an enormous boom in retail trading in the Forex market. Certainly the last 5 years, this area of speculation amongst traders has grown to be never seen before levels. The attraction being the market's highly liquid, it's open almost 24 hours a day, and the market is seen as a trending market, going in one direction or another for periods at a time. Now, most trade the Forex market do so on a very short-term basis, days at most, rarely weeks. Some trade intraday where they have positions that are open for hours, if not minutes. Now, the list of those trading in the Forex market is one of the most varied of any of the financial markets. We have central banks, currency speculators, international corporations, governments, institutional investors, large banks, and retail investors, as discussed above. More information on the market participants will be added in further articles. Now, the main centres of trade in the Forex market are the UK, which accounts for over 36% of Forex transactions, followed by the US coming in on around for about 18%. Coming third, we have Japan, accounting for just over 6% of all Forex trade transactions. Transactions in the Forex market have more than doubled in less than 10 years. At the time of writing this, and where are we? We're 16th of November 2012. Now, given its ease of access for retail traders and the growing demand for international trade, and international speculation, this is unlikely to fall anytime soon. Now, one of the unique things with the Forex market is that there is no centralized hub for clearing transactions. Say, as we have become accustomed to see with the stock exchanges, where we have sort of main exchanges in leading cities such as London and New York, for instance. Now, the reason there is no other is because the Forex market uses what is known over-the-counter trading, or OTC trading, which allows for a number of interconnected markets from all over the world where differing currency derivatives are traded. Where a derivative is basically a means to trade an underlying in this case is the Forex market or a Forex pair, and they create a different twist on it to allow profit to be made from it. So that's kind of what a derivative of it is. It's a derivative of the underlying thing. I know that's not written on there, but I just thought I'd best explain it. Now, there simply is no single exchange for the Forex market, although some countries, as detailed previously, are becoming known market trading centres in Forex, namely London, New York and Tokyo, simply because of their dominance in the amount of trading taking place in these major cities. And because of London's dominance overall, it is usually the London quote on currencies that is provided worldwide. Now, currencies are traded in pairs against one another. The main currency pairs are as follows: the EUR US dollar, the US dollar JPY, which is the Japanese yen, and the GBP, I can't even say it, the Great British Pound. And I'm from England. I don't know. It's a shame, isn't it? Great British Pound and US dollar. Now, the first currency quoted in the main currency is the main currency converted into the following currency. For example, the EUR, the euro, US dollar. So it's the conversion of €1 to $1 US dollar. Therefore, if you expect the price of the euro to increase against the dollar, you would go long. Now, you'll have to see the Financial Trading 101 to see what I mean by long on the euro US dollar. Conversely, if you expect the dollar to increase in value against the euro, you would go short on the EUR US dollar. Now, quotes on currencies are given as follows. As a number 1.5432, for example, or US dollars, which basically means $1.54, with 30, now get this, 32 fractions of a cent, 100 making 1 whole cent. Now, a single move in that fraction of a cent is known as a pip. Given the Forex markets are incredibly liquid, given its where are we? Incredibly liquid trading is instant almost, and some currency pairs certain times can be incredibly volatile. This can mean massive movements in pips, meaning that there is possible to make large sums of money and also equally lose large sums of money too. What is interesting is that the US dollar was used as a basis for a currency quote in over 84% of transactions. Now, in further articles on financialspreadbet.com, I will cover some of the thinking behind what makes the Forex market move and what drives this. I will then provide trading tutorials and trading the Forex using the Forex financial spreads, as well as a good assortment of techniques and methods that you can use to benefit from trading in the Forex. Now, also, if you are interested in trading the Forex market directly, we will be producing a separate website focusing just on the Forex market. Now, this will come in time, but for now, for those of you interested in Forex, I would in fact just advise that at first you start trading using an easy to understand product, say, for instance, here, financial spread betting, rather than jumping right into the Forex market, certainly if you're new to trading. The important thing to understand is that to learn about trading, you have to start by learning the market you are entering, learning the product that you're going to use to trade that market, and then start to develop skills in trading that market using technical analysis, all of which you will find on this website. Then when you become proficient in trading using financial spreads in the Forex market, then and only then think of moving directly into the Forex market. Now, one final note to my American cousins out there. Sadly, you guys are not allowed. You can't trade financial spreads in the US. I do not know why. There's been so much news about it. A few years ago, there was a real hoo-ha about, why does almost every other country allow financial spread betting and it's only the US that doesn't? Considering kind of its love with gambling and so on when you look at Vegas and so on. So it's an odd one. However, don't let that put you off. It is unfortunate. However, it's strictly if it's strictly the forex market that you want to become involved in, then you can still use the same methods and techniques that I cover in this website. Just make sure that you use a demo account so you get a good feel of how things work. Now, there will be more information of the best places to get a good demo account, which are free, and we'll be covering that in another article very soon. So there you go, guys. That's our the basics of the forex market. We'll be producing much more very soon, in the next few days, in fact. Okay, enjoy, take care, have a good weekend, and all that groovy stuff. Take care, bye.